Hey, welcome everyone. We're back. We're back. This is actually episode 7, Crystal, of the Investors Corner with Crystal and Aneel. We have a very special guest today. We got a guest. It's about
Yay!
we got to get more guests in here. I think this is you're officially our third guest. I want to say, or second guest.
Third? Yeah.
Third guest, yes. So welcome. Number 3. We always count the ones. We're remembering all the
Yeah.
ones that come on.
Oh, that's
And yes, and so welcome to episode 7. Crystal has connected and brought our guest today. We have Wanda Croft, is it?
correct. Wanda Croft.
Welcome to the Investors Corner, Wanda. How you doing?
I'm doing good. Thank you guys for having me. I feel honored to be invited.
Yeah, we're excited. I have to say, I met Wanda at a investor meetup conference, and immediately she was one of those people that you meet and instantly connect with, not only on the investing side, but her heart, and so much to glean from. And just since we met, been able to have some awesome conversations, and has become a friend. So I'm excited that you're a part of our podcast, and I know that our listeners have a lot to learn, and excited to what you have to bring.
Thank you so much. Yeah, it's funny, right? Because it's only been a few months, but I feel like
Right.
we're really connected. I totally agree with that.
Absolutely.
Those are the most genuine ones, right? Like you feel like you meet people, but you've known them forever, right?
Right.
And I'm honored to be with supporting the Invest Her group as well. I love that.
Well, Wanda, I would love for you to share with us a little bit about your investing background, what you're currently working on as well. And I personally have met Josh with Paper Profits once face to face. He seemed like a great guy. I have not met Jane, but would love to hear more on what you're working on as well with that project.
Yeah, absolutely. Absolutely. So I have a diverse background, I'll say that. I started off as a flight attendant for American Airlines, 25, oh my gosh, that's a long time ago. But I did that for about 10 years, and I got really just wanted to get back into a normal routine. And so I went back to school, and then I became a dental hygienist. And hygiene was a great career as well. Great pay, great flexible schedule. But at the same time, as I've come to learn for myself, it's like I really like being in control of my schedule. That's always been my ultimate goal. I didn't want to wait till I was, fully retired. I didn't want to wait until, like I made enough money. Like every job I've ever held has been with the result of, okay, my time is my schedule for me and my family. And so even benefits haven't been that big a deal to me. I'm like, nope, it just doesn't equate to like being able to fully control my schedule as much as possible. And, I've always tried to travel and do things and experience things. I've never wanted to wait till retirement. Like it's so long. There's no guarantee you're going to be there,
Right.
or that your body's going to function at that time.
Mm-hmm.
And I've had a lot of people in that age group remind me of that. They're like, you're smart to do it now, because once you get to this age, you don't know what's going to go wrong. So I'm glad that I've always just kind of lived our life like that for my family.
Yeah, I love that. And I love that you're focusing on right now, the now, instead of course, we want to build up for the future, but future is not guaranteed either.
Yeah, exactly. So from hygiene, I started investing in 2013. I was with one company that, I honestly said I wasn't very happy with, like a lot of us, right? Realizing like, wow, this is all that's out there. Like this can't be it. And I started driving around in my lunch hour, and I started seeing little houses and just saying like, hey, I could buy that house and rent it out. I let me look into this. And actually, since I was in my 20s, I've always read personal finance books. I always had this know-how of money and how to make it work best for you. Everybody's read, Rich Dad, Poor Dad, lots of books aimed at women, just all sorts of different books. But I started off with rental houses in 2013, like I said. And I ended up getting that with a hard money loan because I didn't realize I was buying from a wholesaler. So the one thing I was super scared to do, I had to go buy that house with a hard money loan because I had already signed this contract with a wholesaler. So anyway, it was super scary. I cried that morning that we were going to close, but I didn't. Praise God, like it all worked out. We still have our rental. It's been what, 2013, so 11 years. And that house has been empty maybe 3 months out of those 11 years.
Wow.
Like they're just, and they haven't all been perfect tenants, but the tenant I have there now is like, 4 or 5 years that she's been there. And I'm hoping to owner finance the house to her. But
nice.
Yeah. And then then I got a second rental that worked out perfectly. And then we adopted 2 boys. So we had to get a bigger house. So we converted our old house into a rental and we moved into this one. It's a little bit larger. In the process of those years, though, I realized I didn't want, my husband's my handyman, right? and I manage everything. And we realized we didn't want so many hard assets anymore, right? And I had kind of heard about notes, in the background. And I was kind of, as I learned about it, I'm like, okay, that seems like the epitome of real estate investing, right? Being the bank. I did take a sidestep and I did a passive investment with 2 different multifamilies. And so those were like in 2018 and 2019. And then in 2020, I bit the bullet and I decided to join this coaching group to learn about notes. I'm like, you know what? I've never really invested a big chunk of money into real estate education. Everything has been self-taught. It's been with mentor, just real estate groups in the area, books, YouTube, university, everything was on my own. So this time I decided to join this mentoring group. I got familiar with some of the documents and what we needed to do. I can't say I really learned how you manage a note because we were specializing in non-performing notes. I'll say that.
Non-performing.
Okay.
Yeah. Which I don't know if your audience is aware. Performing notes, which are like, I pay my mortgage every month, so mine's a great performing note. Then you have non-performing notes, which are those borrowers who haven't paid in months or years, right? And so those loans, as the banks tries to sell those, are not worth as much. So you can sometimes buy those at a deep discount. That's not what's going on now, but that used to be the case. You could buy them at a deep discount. But anyway, so I was learning what to do with those, right? And the truth is you really don't know until you really just start purchasing them and working each of those out because they all turn out kind of different. I always felt like they're like lottery tickets. You never know which loan was going to pay off, right? Because some of them, you could purchase, you could purchase the note, you would start the foreclosure. And, next, the borrower turns around and is like, okay, I'm just going to pay off that loan. Now I know who to pay and they refinance and you just get paid off. And so like, if you bought that at a deep discount, then here you get this wonderful payoff. Right.
Right.
And then we've had some, that, they're going on 2 years later, like 3 years later, like they just know how to fight the system and COVID threw everything for a loop. So they're just kind of all different, know? Yeah.
You prefer good.
There's a couple of things I want to start about just your journey is it's 2 important points. You started because you wanted freedom, right? Because you wanted control of your time, right? But you also started scared, right? You said the first one you were terrified about, right? I think, a lot of people need to understand that to get to your freedom and to get to those goals, you got to just do it scared. And you seek information, but then you apply that information, right? And you learn that the best way to learn is by experience. So, and it's really intriguing about the non-performing side because we haven't covered too much of it. But yeah, go ahead, Crystal. I thought those were important points.
Yeah, I love that.
Oh, go ahead, Crystal.
No, you go for it, Wanda.
No, and I think part of it, because I've watched Bigger Pockets, I've watched all the podcasts, right? And they talk about analysis paralysis for most people, right? Who are so scared to jump in. And I think I just had a little bit higher tolerance because I had been investing in the stock market for years. And I've seen those ups and downs, and no investment that you're doing is going to be paying off grandly in 2 years. I mean, it's all a slow, steady build, right?
Yeah.
Yeah.
And that's just kind of helped me see it as time goes.
But you jumped in. I think it's interesting that you jumped in with non-performing as well and learning about that, because I'm the complete opposite, jumped into doing performing, and I still love performing. We have non-performing, but I don't sell those. And so it's, I wanted to ask, what do you prefer, performing or non-performing, and why?
Well, with performing, you have a little bit more responsibility, right? You got to make sure your property taxes are getting paid. You got to make sure that the insurance is current if there's a house on the property, right? So there's more things that you need to stay on top of. When you come in as a second lien, which is what we were purchasing, was non-performing second liens, then the first lien's the one kind of more responsible of all of that. Now,
Right.
the scary part is when you buy a second lien, then, possibly if you haven't done your due diligence, then that property may not be worth much. And so if the first lien is going to foreclosure, then there's not going to be any money left to pay off your lien. Right. So there's some due diligence that you have to do in advance. And so I've learned, I've learned how to kind of look at those, but I will say, when I joined Paper Profits, that's really been kind of more Josh's job. And so he's the one who really does all the dissection on what we were purchasing. Okay. And he and Jane. And so I guess I kind of left that out. So after I took the mentorship, Jane was in my mentorship group. So we were meeting on Zoom, it's 2020, everyone's scared from COVID, but some or other we were meeting once a week and just trying to figure this out and learn about notes and network and all of that. And then thankfully, I guess, when did it end? That was 2020. And then so January 2021, or no, December 2020, Josh and her had teamed up and they started Paper Profits Funds. And so they needed another asset manager. He had one who was already working with him and he needed a second person. So it worked out really well. She referred me to him. He's an hour away from me because he's in Austin and I'm in San Antonio. And nice. I knew what he was doing and I was willing to learn whatever he was going to teach me. And so he gave me the opportunity to just become his asset manager and work from home. Right. So again, it just opened up more freedom for me and my family. And so I had to jump on it. I was teaching dental hygiene at a school here locally at the time. And that's when I decided, I'm like, you know what? COVID just really, I needed a break from everything after COVID, with, from dentistry. And, so that's how I started working for Josh. So it's been over 3 years now. And so, we've been doing nonprofits for 3 years. I mean, I'm sorry, nonprofits, non-performing. I have a nonprofit too. I'll talk about that later, but, sure. But we've been doing non-performing now for, the 3 years. And so they're all over the place. We've bought loans all over the country.
So Paper Profits is purchasing for their fund. It's all non-performing. Is that
correct?
Okay.
So we as we turn those around, right? Because the process is you start foreclosure, and 95% of those work out into something profitable. Maybe 5% of those will not work out well, or we have to take it all the way to foreclosure. It's actually a very high percentage that turned out pretty good. I will say that has a lot to do with Josh's due diligence, right? As he's looking at which loans to purchase. In the non-performing loan world, when you're buying these pools of notes, you're sometimes not allowed to buy what you want. You kind of have to take all of them, right? So some are great and some are not all that good. So it just depends who your seller of the notes are. Like, are they willing to just let them go for, like all at once, or they call it cherry picking, taking the good ones?
Right. So Paper Profits Fund, it's kind of a tongue twister. Paper Profit Funds, it's an investment. It was an investment fund that you were involved in, correct?
Correct.
And it was a pool of a fund that was focused on non-performing notes. and your role
Right.
with them was as their asset manager,
Correct.
right?
Yes.
So can you just go over a little bit about, you walked into that role, how it came about. I think you did mention that. But what was the number one thing that you learned? What was rewarding about it, right? How
Mhm.
you helped investors in that role or connected with more investors in that role? And you can give me one nugget that, that was tough about it, right? It was challenging. I'm sure you learned a lot, right? A lot of successes and a lot of ups and turns in any opportunity. So yeah,
Yeah.
share a little bit about your time there, and if you're still affiliated with them, I'd love to hear more
I
about that.
am. So the loans is to answer your question. So the what I've learned since I've come into Profits is there's a lot to read, a lot to look through. It's very tedious, right? Looking through
Okay.
all these documents and making sure everything's correct, making sure that everything was filed with the courts, assignment chains, allonges, all these documents that you need to prove, like, hey, we're the new owner of these loans.
Okay.
And because there are unscrupulous people out there who cheated people and things like that. So,
Sure.
we've legitimately purchased them. And so we have to prove all that. So it's kind of like a desk job by yourself in your home. So you got to make sure you're getting out. And that's one of the reasons I do love going to network events and talking to other people in the real estate world.
Gotcha.
That's probably like the hardest part is just the day in and day out, and just making sure you're reading through all these documents and getting everything as accurate as possible. Mm-hmm.
Yeah. What do you feel like? And you're still working right now on the Paper Profit funds. Have things shifted since you've been with Paper Profits? Is that what you're currently working on right now?
As I was alluding to before, the price of the non-performing notes has really shot up. As people found out about this niche in investing, and excuse me, the beauty of notes is that you can do it all from your computer. You're not going out finding hard assets. You're not out there looking for buildings. It all can be done from your computer. So as you're doing all that, then what has happened is that the more investors have gotten into this space. So as the space gets a little bit more crowded, those non-performing notes that used to sell, 30, 40 cents on the dollar are now like people are trying to sell those at 80, 90 cents on the dollar sometimes.
Yeah.
And that's just ridiculous because it doesn't even take into account what your legal might be, right? Your legal, and again, like I said, it's like lottery tickets. Your legal could be one letter that an attorney writes for $150 and the loan gets refinanced. Or it could be 10,000 worth of legal and you're still trying to prove that you own this note and, on and on. So you can't really just, you can't justify what they're going for now. So what we've noticed then is that there's actually quite a need to originate bridge loans, and so we're shifting our focus more into that now. So we have our non-performing note fund, and then we have, as we've gotten them to perform, we have a re-performing note fund. So we're taking our investor money and either purchasing the notes, or we have investors who are investing in our re-performing fund, and then that's like a steady income that they make there. And then we are now originating bridge loans for more like commercial investors purchasing multifamily or shopping centers, that kind of thing. So we have another fund that we've started that really isn't dealing with the notes, but we are becoming more lenders now.
Okay.
Yeah, and talk to me where that bridge or that repurpose, because I haven't heard that before, repurpose fund. What is that? Just money that's being invested to turn these notes around? Can you walk me through kind of the mechanics of that?
Yeah. So maybe I got a little confused there. So non-performing note fund is what we started off with, right?
Yep.
As we have turned these around, and now we get a borrower who's signed a modification and has agreed to go ahead and start paying on this existing note again. Now that note is now categorized as a re-performing note.
Oh, okay. Okay.
right? Because now it's not in that non-performing category.
Gotcha.
So now now we're watching it for a few months, making sure that borrowers staying on track, that they're not falling off again. So once they're reperforming, then we would actually sell those to our fund that had that's an income fund.
Okay.
And so
Okay.
we've had that in existence. It's called Paper Profits Income Fund. And
Okay.
so those notes are now performing, and they're just turning out like a regular income. And so that was for our investors to take advantage of. Now that's kind of the difference between the non-performing and the reperforming. They're the same note. We've just moved it from one category to the other.
Sense. Very smart.
And the whole goal, I think, with non-performing, and correct me if I'm wrong on this, because I don't focus on non-performing, we focus on performing, but is to keep the borrower on the property.
Yeah,
I mean,
we don't want to take their houses.
Right.
They're all over the country, when but we also want to make sure that people are taking us seriously. So sometimes we do have to go through the entire foreclosure process because they do owe that money. But yeah, like I was saying, 95% of them, they go ahead and modify,
Yeah, which is great, that's actually a lot higher percentage than I thought. But I think it has a lot to do, like you said, with Josh and Jane and you going through the due diligence of that and making sure that they're the right properties to purchase on and the borrowers to work with as well. So that's exciting. I did want to hear on this new project that you're working on with Paper Profits. Do you prefer the lending side of it, or do you prefer the note side?
There's not as much to do, now, because it's more like origination. And I mean, we're going through our due diligence with those, making sure these are good loans that we're giving, to good borrowers. So it's not as I guess there's not as much for me to research and stay on top of and everything. Yeah. I mean, we're still boarding the loans and working with the servicers and all of that. So just not as busy.
Yeah. Yeah, I know the paperwork is a little daunting for me at times. And so that's where my husband comes in and he can, and attorneys. So, but for me, I am not the detailed one. I'm more big visionary, relational. And so I get the paperwork side.
I fall into that category myself too, more, Crystal, but it's funny because you would think like your attorneys are on top of all these loans, because we're managing these like every month. We're saying, okay, where's this one at? Where are we at here? Like, what do we got to do next? What documents do you need from me? And, these attorneys just forget about it very frequently. They don't know, they're huge firms. We've kind of learned we like working with smaller firms. Because you just kind of fall through the cracks with those larger firms in other states.
Absolutely, I would completely agree with that.
And isn't it very important, when you're analyzing and investing in a non-performing note, how much does being in a specific state matter? Right? Can you talk a little bit about that? Because of course I'm learning. I'm still new. I think can you talk about, just for our listeners and make sure we get this content out there, is these judiciary states. Can you please talk about, since we're going into non-performing, how much, where that collateral and where that property state is affects the non-performing note, and when to invest in and why?
Yes, the laws have been changing some. And so, some of these, that was something that was new to me when I went into, is some states you have to have a debt collection license. And if you don't have a debt collection license, and you can't foreclose on that property.
Oh, wow.
Some states are just brutal, especially after COVID. So many protections went in to borrowers, right, who were late. And, some of these loans, we couldn't do anything for an entire year. We just had to sit on them and wait it out. Even now, areas like New York and Maryland, like they just still are, the courts are so slow. So slow. And then foreclosures are just kind of growing. Evictions are now growing. So these courts are very busy now. There's certain states that we just kind of won't even touch anymore. Yeah.
Right. And is
thankful for the great state of Texas.
I know. And that was a big thing, because one of the notes that I purchased, I didn't know I didn't know due diligence. I was still so green at the time. And so I purchased a note in Allegheny County in Pennsylvania. And I had no idea, but this area was on the cover of some magazine as like the worst hood in the nation at one point. And I'm so sorry if you're from there. I'm not trying to be, but I had no idea.
Sorry, our Pennsylvania listeners.
So I bought this note, and when I had a realtor go by and do a BPO, right, give me some idea what this property might be worth. They were too scared to go there. They were like, can I park right in the front? And I'm like, I don't know. I don't live there. I'm in Texas. And come to find out, like, that borrower hadn't paid property taxes in over 10 years. They had stopped paying on that note months before.
Wow.
I'm sorry, years before. So like the local governance just lets these buildings sit. And coming from Texas, like, that just doesn't happen. You don't pay your property taxes, then, you're going to lose your property in a year. Wow. And so that's, I think, like, those are the kind of things that are so important if you want to keep the areas you live in looking nice and family friendly. I didn't know that until I bought this note. Wow. So there was a tree growing in the middle of that house.
Wow.
So that's like my everybody has their one really bad real estate horror story. And that was mine. I definitely took the loss on that. I didn't know what I was getting.
Yeah.
Wow.
I appreciate what you shared, because I feel like a lender friendly state is so important when you're purchasing notes. There are areas that we even in Texas that we won't purchase, but for the most part, I mean, Texas is great. Arkansas, Oklahoma, there's just some great states that we love, love, love. But I think just for listeners, really focus, like what you said, on states that are going to be more lender friendly, as opposed to the other, and allow squatters, basically.
So is it the term, non-judicial and judicial state? Is that how you know, or is there a list of these states? Like, how do you analyze or find out, like, this is a state? Is it just you have to do your own research? So is there? That's my first question, I guess. Is there, how do you categorize which states have, more favorable lender laws? Or like you said, I never heard there was a debt collection license, just to foreclose. So those type of things.
I'm sure there are lists out there. I don't have one myself, but there are groups out there who really specialize in, as they're teaching you how to do the notes, they have that kind of information to warn you what states to get, stay away from. There's also, attorneys. There's other individuals who've been doing notes for a long time who will actually help you if you're looking at a list of notes to buy. Like, they'll actually look at that for you and give you an opinion whether, for a couple $100, they'll give you an opinion whether it's a good note to purchase or not.
Oh, okay. Well, that's good to know as well.
Yeah, there's so many niches in real estate of things that you can do, and once you get good at it, like what you can do. There's, we worked with individuals who, say the borrower agreed to modify the loan, they helped us come up with how, what does a new loan look like? What are those new terms, and taking into consideration the late fees, our legal fees. And they would put all these options together for us so we could present to the borrower. Oh, I can't hear you, Crystal.
Crystal, we lost you.
Oh, I'm talking the whole time.
Okay, go ahead.
I had one more question for you for Paper Profits. But are you guys purchasing through individuals or institutions for your notes?
Well, at this point, we've kind of halted purchasing any more notes. We're going to focus on these originating these bridge loans. So what we've come to see is, because in multifamily, like, that's still actively going on, right? And multifamily syndications take a lot of time. And these syndicators invest a lot of their own funds in advance for all the due diligence, right? The things they need to research beforehand to figure out whether this is a good building to buy or not. So when they've already invested all of their own funds, and they also get to, a year later, and as they're pulling all these investors together, Like they really need to make sure that they can close on these syndications. And so that's where we're kind of coming in. At the very end, they may need some to show that they have funds for, rehabbing the property or things like that. So that's what we're finding is becoming our niche here. Are these bridge loans to get these help these syndicators close.
It's interesting.
That's exciting. What, as far as the listeners, if they're listening in, what are ways that they could partner with you, work with you, things like that? Anything that you want to share?
Yeah, absolutely. So, with Paper Profits funds, like our fund that we have right now is called our Opportunity Fund. And it is for accredited investors, but our minimum requirement is, $50,000. But yeah, we'd love to have you come on board. And this is also one thing that people may not realize. When you want to invest in different funds or syndications, the multifamily ones that I went into, like you're not going to see any kind of income come off of those either 6 months, a year later, 2 years later. You don't know where it's going to be at. Now, there are some, like in every single investment, there's some pros and cons. And so you may have really great tax benefits that you may get in the meantime, but you're not going to see any cash flow. With us, you're going to see cash flow pretty quickly by the next quarter after you invest. Okay. So, if you're just looking for income, for cash flow, then, we're a great source.
Yeah, I love that. Cash flow. Yeah.
That's the name of the game.
Yeah.
Yes.
Right.
And Crystal, as we've talked about, it's all what I learned early is when you want to reach wealth or you want to reach freedom of your time, it's going to be a handful or as many handfuls as you can get of cash flowing producing assets, right? It's going to be just different avenues of cash flow coming to you.
Yeah, so absolutely. And I love what Paper Profits is doing is because you've done performing, non-performing, or changing non-performing to performing. You're doing the funds. So there's different ways to invest and diversify, which is huge. And immediate cash flow.
And you're evolving with the times and the landscape, right? You're realizing like, hey, your multifamily syndicators, they're needing this bridge money to close on these syndications. Because, we talked about this in past podcasts, how it's been really, really tough in multifamily and other asset classes as well, especially those syndications that started 2 years ago, to really hit their goals of stabilizing properties and getting returns back to their investors. But like you said, even closing on the deal in the first place, right?
Right. And people don't think about those kind of things. It's kind of like, oh yeah, it's a done deal. We're going to do the syndication. It's like, there's a lot of moving parts to that. And if at the end it can't close for some reason, like, that syndicator can't move forward. Those investors have just wasted a year kind of waiting for it to close.
Yeah.
Right.
That's great. Great information.
Yeah.
Well, I did want
that's are interested in joining with us.
Yes, absolutely.
Okay.
What is it?
I know
paperprofitsfund.com?
Yes. Mm-hmm. Yeah, or you can.
It's still a tongue twister for me. I bet you can't say it 3 times fast. I mean, paperprofitsfund.com.
No. You should hear us when we're having our internal meetings. We're like, which fund are you talking
about? Yeah, that's funny. Yeah, I was writing them down because you kept saying fund, this fund, and this one. I was like, okay, wait, which one is she doing?
There's pretty much 3, and but I can honestly say like we're just turning along. It's a great team. It really is a great team.
Great to hear.
Well, tell us, I wanted our listeners to hear a little bit more about your nonprofit, your passion, other passion as well, and would love to hear that before we close up. And any last words or things that you wanted to share, we'd love to hear.
Well, let's see. In the real estate world, like we were talking earlier, Aneel, just, do it scared. Just get in there and do it.
Do it scared.
Everybody that I have met in the real estate world has been so awesome. Every meetup I've gone to, most people are like, let me show you what I'm doing. Let me teach you what I did, and everybody wants to help each other. Like, get out of that rat race, right? And
Yeah.
so I have had great experiences with everything I've ever done, and get out and network, get out and go to meetups, just go and listen. That's all you got to do. And you'll see the opportunities that God will just open for you. I honestly thought when I got our first rental house, I really thought like, oh, it's going to be 10 years before we can afford another one. And it just shocked me how he opened another door, and there was another opportunity 2 years later, and then another opportunity the next year. And it's like these opportunities just keep coming. So if you want to jump into real estate, I highly recommend it.
I love it.
Yes.
We need a sign that says "Do it scared."
Do
Like
it scared.
I got
That's
it.
gonna be our motto.
That's
Crystal.
right. Do
Yeah.
it scared. Well, saying that, I was going to say, do it scared. You jumped into something with your nonprofit, doing it scared with adopting your boys. Can you share a little bit about that before we go? Because this is my heart, my desire. So I love hearing this.
Yes. So our nonprofit, I started this, 2024. So it was like summer of 2022, where we adopted 2 boys in like 2018. And just, kids out of CPS, right? They're brothers, and our life has changed so much since they've come to live with us, and we love them. They feel like they've always been here, honestly. I don't know what it is about boys, but they feel like they've always been here. But the one thing that it's hard, what I came to learn is like, it's really hard to bond with your own children. It's that much harder to bond with foster and adopted children. There's just that history is not there. So when everyone's at home, everyone's worried about homework and chores and all of that. So I love to plan vacations. I love to plan things to do. Like that was something that I always wanted to do for my kids, because growing up, I just had none of that. My mom was a single mom. She was just working, getting by. And so I don't really have maybe a couple of like vacation or fun things that I did as a child. I just didn't do much. But as an adult, I wanted to change that for my own children. So this led to me starting a nonprofit called Fostering Memories. And our focus is to gift foster and adopt families a day of fun. Get everybody out of the house, get everybody just to focus on hanging out together, making new memories for everybody, right? Let's replace some of those horrible memories they may be coming from, but focusing on bonding and trying to, just become this new family that everybody wants to create. And so we've done things like, it was really cool how God just opened the door, because I applied for, with South Texas Legal Aid they help nonprofits get organized and get created. And so we were selected. They totally created us for free. We got our nonprofit status. We applied for that in a month. And so like from inception, when I got the idea at church, and it was how it started was that God's like, why is it always about you and your family going out and having fun? Why don't you take another family out who can't afford it?
See, look at that.
And so that's kind of how it all began. And immediately the first woman that we took out, she had adopted 5 children. So I'm like, hey, can we take you out on a boat? Let's go rent a boat, and she was just kind of shocked. And so that's where it began. God made it really clear. He's like, why are you stopping with her? Like, keep going. Yeah. There's other families who need to do this. So then we took another, this is more kinship in the foster adopt world. When a grandparent or family member takes in a child, that they call that kinship. So there's a gentleman at our church who had a granddaughter that he's been raising since she was an infant. And so we took them to iFly and let her experience that. And him letting him, do that. And he even said, he's like, I've always wanted to do this with her, but 1, I couldn't afford it. And 2, like, she doesn't want to just come with me, so my family hosts these families and we all go out together and just try to do fun stuff together. Just this past weekend, we took another family who is fostering a 15-year-old girl. And this couple has 2 children, 2 girls. And we took them to the Cliff Carver in Canyon Lake. It's just a roller coaster. Like, it's not a roller, it's a mountain coaster where you can control the brake. It's the first one in Texas. Highly recommend it. It's totally cool.
Super cool.
So we did that. And so it's just that, like, we're trying to do things that are maybe out of price range or out of people's comfort zone to plan. You know, again, people are scared to plan stuff, and maybe what if it fails? It's like, you just show up. Just tell me when to come, and we'll take you guys. But we're also focused on foster and adopt families with older children, because they kind of get left out. Their foster kids are given a lot of free stuff, and things to the zoo, kind of, that's
younger kids.
Even for the younger kids. So our focus is to do things for the older kids, things that they're going to find enjoyable.
Oh, man.
I love it.
It's so sweet. Yeah. It's a simple concept, and it came to you, and look how beautiful things come together, and it looks, it sounds like it's going so well. It's a beautiful concept and simple, right? I love it.
Simple. Yeah, when they were forming us, the attorney kept asking us, like, so what else is your entity going to do with the money, and like what departments are you going to have? I was like, it's nothing. It's like, we're going to make enough money to take somebody out. Like, it does not have to be complicated.
Yeah, yes. So if someone wanted to support, is it Fostering Moments, right? Fostering Memories?
It's called Fostering Memories. Okay. But the website is fosteringmemoriestx.com.
Okay.
Fosteringmemoriestx.com.
Guys, go support it. Go support it. Well, thank you. I think this was great. Love having you. A lot of insight, a lot of good insights, great background. I think we're going to take Do It Scared from this podcast for sure. Right, Crystal?
Love it.
What's scared?
We do. Yeah. That's the next t-shirts. So check out Paper Profits Fund. See, I got it quick that time. Check out FosteringMemoriesTX.com. Always follows us on social as well. Crystal Rumor on LinkedIn. I'm on LinkedIn as well. We're growing the podcast. Check me out on my YouTube as well, AneelIrfanTV.com. I thank everyone for joining us. Our wonderful guest, Wanda Croft. It's another episode of the Investors Corner with Crystal and Aneel. Another one down, guys. Thanks for listening.
Thank you, Wanda. Thank you, guys.
Thank you, guys. Bye.
Awesome, Aneel.